Assalamualaikum. Today I will present a critical analysis in Islamic banking focusing on its Sharia principality, ethical implication. This examines when develop into the contractual nature and maqasid-based consideration of Tawarruq, particularly in context of consumer financing practice in Pakistan. By exploring these dimensions, we aim to assess whether Tawarruq aligns with fundamental principles of Islamic finance or merely replicates conventional debt structure. First, let's we see the little background of Islamic finance and Tawarruq. The Islamic finance emphasis on justice and transparency, aiming to create fair financial system that benefits all parties involved, thereby fostering trust and ethical dealings. And Islamic finance revolves around elimination of riba, which is interest, gambling, which is also miser, garat, which is ambiguity and exploitation, which is zulm or injustice, promoting profit sharing and risk sharing model that aligns with ethical standards. Now coming to Tawarruq serves a regulate to complying with Sharia, enabling consumers to access funds while adhering to Islamic principles, yet raising question about its ethical implications. Now, identifying the problems I have pointed out in my paper is Tawarruq versus secure financing, high rates, transparency issues, and need for ethical evaluation. Tawarruq is increasingly used in Pakistan as an alternative to unsecured loans, with institutions like the Islamic Bank offering these products to meet consumer needs. These unsecured loans could be an alternative to personal loans, and then there is another issue of high profit rate. Profit rate in Tawarruq often ranges from 35% to 45%, raising ethical concern about exploitation, especially when compared to asset-based financing rates of Kibor plus 5. These are a comparison based only of Islamic products. As mentioned in the paper, that in Tawarruq, what they are charging is a 35% to 45% profit rate, annual profit rate, while if we go through diminishing musharaka or ijara mode, the maximum rate could be Kibor plus 5. As of today, Kibor maybe 11%, and then 5% means in others asset-based financing like ijara or diminishing musharaka, we can get it in 16%. Financing, whereas if we go to the products based on Tawarruq, we will have to pay 35% of the profit. This high profit raises a concern of exploitation, and hence this rule, which is the one of the things that Islamic finance wishes to eliminate. Then there is a transparency issue that when that late fees are charged, and said to be they are said to be given in charity, but there is no transparency that these things goes on charity, and which leads to trust deficit and repayment. The repayment culture is driven by fear rather than ethical responsibility. Hence, hence all these raises an issue of ethical evaluation that whether Tawarruq should be applied in consumer financing with alignment of Maqasid Sharia or not, especially considering the fact that banks like Nizam Bank, Bank Islami, and other Islamic banks doesn't opt Tawarruq in its model for the product, especially for consumer financing. However, the other banks like the Islamic Bank of Pakistan and Faisal Bank Limited, they heavily use this Tawarruq model to give alternative for conventional unsecured conventional loans. In literature review, I found three main things to be discussed. One was the asset ownership requirement, that before selling of ownership, before selling of an asset, it must be owned by the seller for to be a legitimate sale. And then there is a fixed pricing principle that as per to be the sales contract. It is only fair if the price is applied upfront. However, there are some banks who applies uh, profit rate based on outstanding matter, which can be justified in diminishing musharaka or ijara, where asset belongs to the bank and the sales are happening at the time of the payment. However, in Tawarruq, which is a sales contract with deferred payments, the sales has already occurred and there is no longer an asset, so price can only be applied upfront. Then there is a genuineness of sales that it should reflect actual market condition rather than just on paper commodity being exchanged without any reflection of market condition, which will raise the concerns of riba and garar. Contemporary debate on Tawarruq is that it is a pre-arranged transaction which mimics the conventional loan. Then there is a lack of commercial intent. The financing doesn't intend to get the commodity, as well as the bank doesn't intend to sell the commodity. If the commodity is only being attached in order to legitimize this contract based on Islamic principles. Hence, this raises the concern of whether it fulfills the Sharia maqasid or not. In my critical analysis, it was around the same literature review that as Tawarruq is fundamentally a sales contract, it should abide by all sales conditions, the sales contract condition, the valid sales contract condition that Sharia is allowed in order to avoid riba, which include that the price should be applied fixed upfront rather than based on outstanding limit outstanding. amount, which because that would attract riba, and there is no real calculation of profit once it has been decided in upfront. So basically, what I'm trying to say is that if let's say $1 million asset is being sold through an through Tawarruq or sales for sale, then the bank may do this that at 20% profit, making it a selling price of 1.2 million and decide an equal or whatever payment schedule for the client. But the total amount should still remain 120,000 regardless of when and how the client is paying, and the profit shouldn't be being calculated recalculated upon remaining outstanding, because remaining outstanding is only a debt and not a new sales contract, and any profit applied on that would undoubtedly be riba. Just as I said in the previous slide, that it should be of valid sales contract adhering to all sales uh, principles, valid sales principles. Then, as sales occurs at inception, there shouldn't be any profit occurring again. No need to justify. Then there was one thing that bankers would justify high rate was that the purpose of this this arrangement is Tawarruq is that sometimes the people doesn't have anything in collateral and they need to keep pay their liabilities and they are heavily on that, so they need an Islamic alternative to pay all that. But if we consider that if we consider their claim about that, then it doesn't justify their high profit. In that case, it should either be profit free or very low or at a very low profit. Hence, it doesn't justify extra profit they are being applied, and also raises the concern of ethics on the usage of profit rate on on such arrangement, which may attract zulm if not riba. Another is the issue of lack of visibility, trust deficit, fear-driven culture, and ethical discomfort. And as I presented before, that customer doesn't know if late penalties are actually going into the charities or not, which leads to trust deficit, that whether it is actually being run on Islamic principle or just being uh, or just that Islam is being used to justify their riba-based transactions. And again, there is a fear-driven culture. The penalties uh, encourages a fear-driven culture rather than building a responsible community amongst the finances. And also, there is a ethical discomfort between in this transaction the when penalties are being offered as a prioritize enforcement over moral accountability. My recommendation is to replace fear-based mechanism with a responsibility-based mechanism, because it is a hadith where the Sultan has cursed for the people who delays their death for undue reasons, and encourages to pay their debts earlier. And there are also hadiths where it is said that until the debts of one person isn't been uh, paid, their final settlement will always depend on, even if he is going to be in heaven, he has done all the good deeds, but he has a lot of debt. Unless he has his debts aren't been paid, uh, he won't go into heaven. So there is a very strong hadith on paying your debts on time. Then another way of building responsibility is introducing a hiba-based incentive for timely paying, which for which I don't demand IBRA or debate, let's say, but something like that. Next time when a client comes, there will be a discounted processing fee or something like that, or yeah, something like that. Transparency can be sure established if there is a system like there is a transparent charity system where a client can actually see their penalty amount being moved to a charity account, just like if you see the FBR model, there is an iris portal FBR where there is a tab where you can see that which organization has deposited tax on behalf of your MTN. So I can go to IRS portal and log in with my credentials, go to the tab and check if Milan Bank is depositing tax they claim they are deducting on my saving account profit or not. Similar model may be used by hmm, by developing a system where all charitable organizations are registered, and the client goes and search on their NPN that on his NPN how much amount is being donated by to which organization. In that way, the customer would know that yes, there are actually my penalty amount is going into the charitable organization rather than being retained by the bank itself. Another my recommendation was a purpose-driven Islamic card. I have seen that Bank Islam Malaysia has been issuing a debit card where certain amount of profit is donated to the sector that card is meant for. So same is my proposition that maybe a credit card or a debit card similar is introduced, like a green card is a green credit card is introduced where any penalties goes directly to the organization that works for environmental protection. So the customer would know that it is just not going into the charity, it is being purpose-driven charity and not just a case that it is being just discarded. And then there is for the people who say that there is a need for people who face difficulty in paying operational cost and mm, operational costs. Hence, they introduce their based unsecured Islamic finance. I'm proposing a micro card Hassan plus Ujala card. This is basically a credit card based on card Hassan, which means that the amount being used is actually on that, and the bank doesn't charge for that amount. The bank only charges Ujala for the specific for card specific, the ownership of that card, the maintenance of the chip of that card. So basically, it would be a fixed charge whether or not a customer uses that credit or not. But yes, the credit itself would be free, and bank can profit from issuance only. Then, as we discussed, that profit structure should only be based on upfront model that is based on budget, deferred installment, which means a deferred installment based savings and sales contract, and then there and if and automatically, which I mean is avoiding reducing balance methodology, so while some banks are still using it and claiming it, and there are Islamic banks. And in conclusion, I would say that Tawarruq's juristic validity is overshadowed by ethical and maqasid concerns. Islamic finance must prioritize fairness and transparency and consumer protection by fostering a culture of social responsibility. Tawarruq can evolve into truly Islamic financial solution, moving beyond mere compliance to embody the spirit of Islamic finance. Thank you.